Good morning, traders and investors around the world. Sorry for this late addition to pre-market prep. Plus, with stock odds, I'm having a little problems with Zoom. Rob's having a little problems with Zoom, but here we are. We're good to go. We got a lot to talk about here. Let me go to the charts. Rob just hopped in with us, but let me tell you what I'm looking at here, folks. And we're not having a great day. Let's share the chart so illustrate exactly what I'm talking about here. On this rough expiration Friday, a lot of volatility off the open. Buy imbalances flipped it, sell imbalances, and SPOOs are having a rough day. Some choppy action in the first few minutes. We're on the lows of the session. And folks, as the question for the day remains, are we going to make a new weekly low? 40.25 and a quarter. Your low on Tuesday. 27 and a quarter. The low on Wednesday. Thursday's low a little bit up that. Bulls have a clear area of defense. Let's see how they do for the remainder of the session. Gold down, or excuse me, crude down $1.16 at 71.45. Ran into some problems just ahead at 73. Gold well under 1,800. They whacked that yesterday, down $6 at 17.50. 70. Silver working in the 22 handle. That's down 34 cents at 22.44. Bitcoin just a little in the red, down $90 at 47,405. Ethereum futures, they're down $101.75. Good morning to you, Eric. Let's see if we got Mr. Freeze and Rob. Can you hear me?
I'm live.
Live. So, Expiration Friday, Rob. Talk about how you approached it at the open and what you're looking at now. How you doing?
I'm telling you, you can hear me all right, right?
Yes. Yep.
Well, doing the homework. There was a couple traders that reached out during the week, and it's like, well, what are you going to do for expiration? How do you value seasonality and all this, right? Because we have on our seasonality almanac, you have symbols that historically have been weak on this particular day. So do you stick with that? Do you weight that, or do you go with your other signals? I can show you what I was thinking and how we arrived at where we are now. So let me share the screen here.
Sure.
I had to, I don't know. I think it's expiration of Zoom today for me. Expiration Friday, Zoom just conked out. So it wasn't too fun there trying to get into the show here. Let me see.
Better late than never.
Yeah. So I have, I've snapped a line on yesterday's low, just like you have, probably, Joel. It's a big consideration whether we hold or whether we break that. At that point, the market was down, its expectation for today already, right? So the question is, will it give us more on the downside or not here? So let me pull this up here. Sorry, having to bring everything back up, of course, as things go. The only way I could get Zoom to work is a reboot. So
I didn't doubt reboot the Eddie Franco.
Yeah. Let me share here. This might give our subscribers some insights into it. It takes a bit of homework, but it's probably worth it. Let's see. Share screen 2. Okay. So you have seasonality, right? And that's the third Friday of the month. So you've got odds that come up based on what it did sort of last time and what the average is for the particular day. So that would be from the close of Thursday to the close of Friday. That's how the seasonality works. It's close to close. And then I have performance, basically just based on the fact that ZIG was up, let's say 1.6% on Thursday, what are the subsequent odds and average performance? And I've got a Connors in here and a percent B. So if three of them agreed, I could take the trade. The one that I would normally reject, I said would be underweighted, would be Seasonality, only because of the number of events. See that? We only have eight. We only have eight events.
Okay.
And whereas on these ones we have more events. So in the more events category, as you know, as long as two of those agree, or as long as three agree overall, it qualifies for a long or a short. So in this case, it qualified for a short, you know, and so on. So what ended up happening was I ended up with more shorts and longs. So the red category here, as I'm scrolling down, you can see how many more shorts there are than longs. Look at that. So wow. Think about that. Think about how nerve-wracking that is when you're coming into a day where you're already I mean, we bounced off the pre-market lows at one point there, but you're still soft, and you're expecting a day where, hey, they could turn this thing around and rally it back. It doesn't have to go the way of Seasonality, right? It doesn't have to. So
it doesn't have to do anything.
I know, right? But so one of these days again where you go and your mind argues with the data. It happens. And I think that's the thing over time, that you get stronger, you know, you sort of build some neural paths in your mind to say, you know what, I'm gonna trust the data, and I'm just gonna go with what it says. So you know, in this case here, there's 217 shorts and 115 longs. What have I been talking about since you and I started doing the broadcast? What was my struggle all the time?
You had too many longs.
I had too many longs and not enough shorts. Well, yeah. So pretty much for September so far, it's been a much better balance. And this last week here, it's been more shorts than longs. So here was more than double the shorts than longs. And I'm lining up the ducks, meaning I'm not just going with one signal. I'm trying to curate from a number of signals, and I still have more shorts. So then with that, I go, you know what? I think the Seasonality is going to play out exactly like our calendar said. And we can go take a peek at that here. Just to remind the viewers again what... So again, you guys all have the Seasonality Almanac for no charge. I mean, you don't have to be a subscriber to use it. Just have to be willing to give your email address. That's all. And so I'll just log into that and move it over here. So once you sign up with your email, you can go and see the Seasonality Almanac here.
Okay.
So I mean, I like it better than some of the other ones. I mean, I used to use the Stock Traders Almanac, which was in a book form. Do you remember that, Joel?
Yeah. Oh, yeah. We've had Yale Hirsch on. His dad created it. Yep.
I like Yale. I've talked to him before, and you know, the book continues to be done. But the granularity, right? The granularity is what we're after. So in the Seasonality Almanac, we have the ability to look at sort of the events that happened through the month. And let's go to page 2 here. So you can see this last performance of the month, you know, and what this SPY is supposed to, or sorry, the third Friday of, well, I'm in April. That's the problem. I got to go to June. I want them to change this so it defaults to the latest month. Would be helpful for me. Right, especially if we're live. So third Friday of the month here, minus 1.02 for the SPY and the IWM less. And we saw the IWM right out of the gate. Did you see the Russell 2000 rally right out of the gate? So the SPY sold off right as we were opening, and the Russell rallied. Anyway, So what did I do? What do you do with a day like today where you have a lot more short ideas than long ideas and you're expecting the market to be down? What do you do?
You don't. Well, I mean, you just be real careful when you're buying your spiders.
So what I did is I said, you know what? And it was a good thing too. I said, well, I could wait till after the open, but I've got a lot of exposure on the short side. So I put in a market OPG for diamonds. So the reason I chose diamonds is as I was looking through this stuff, pre-market there, they seem to be stronger, more defensive. And, on down days, the Dow does tend to perform better, a little bit more flight to quality, right?
Mm-hmm.
So I put in my OPG for diamonds. So I got filled right on the opening print for die. And then as the day played out there, as we were starting to have this orderly sell-off, I shorted some Qs. That's just trading. That's not part of the portfolio.
Rob, why? Like on other days, you tested the waters in the pre-market, right? Was it just because it was such a choppy session? Did you not, try that today?
It was really choppy, and we had kind of lifted off already, and it was like, it was just choppy, right? And then the other days were sort of like we had a clear V bottom or a clear V top kind of based on some news that came out. You remember the top that we had based on the CPI numbers? So that was a clear sort of V formation where it's like, okay, we've hit something, we're pulling back. Let me test. Let me see how it's responding. Same thing on the bottom, when we had a pre-market. Today it lifted off and it was just choppy. So I didn't want to get involved. Well, here's what happened, Joel. So all my orders are in, and literally 30 seconds before the market opens, my trading platform crashed.
Oh no!
Right?
Oh no!
Yep. It just crashed. So by the time I got it back on, I mean, we were already 4 minutes into the day. So it was a good thing that I chose to balance out the dollars at the open. Everything was at the open. And so just a reminder to people that are starting this journey, you don't want to leave things to chance. If you have that opportunity to sort of do stuff pre-market, well, do it with size that you can handle. Don't get too opinionated and don't get too, out of balance. If you choose to wait until after the market opens, well, one of the risks that you have to, assume is your internet could crash, your platform could crash, you might make a fat finger mistake. There's all kinds of things that can happen to you. So again, I recommend doing things in a metered approach, sort of incrementally. Don't get too far out of whack. Just, we call it, hold it tight to your vest, like really keep it in check and don't get too exposed. Because like, for example, had I not done that this morning, it could have been bad. Let's say, for example, the market rallied right out of the gate, and in 4 minutes, we could cover a lot of ground, right?
Oh, yeah. And so
all those dollars that I needed to buy in the form of an ETF, I would have been exposed on. So
did you
diamonds has held up really well through this whole sell-off that we've had. So it was a really good choice, and happy that I did it.
Now the imbalances, did they end up flipping to sells? Because Dennis said they were all buys and then they started to change. Where did the imbalances end up favoring?
I wasn't paying too much attention to that, only because I had so many positions that I was working, right? So when you start to get over 25 to 30 positions, your ability to focus on some granular stuff just is reduced. When you cross the threshold of doing 100 symbols, 200 symbols, 300 symbols, you're going to be more focused on whether your spreadsheets are running properly, whether,
So have
you know
you
what I mean?
migrated away from the OPG orders? Do you do any of those? Or are you just doing with the stock odds? Because I know that was a lot of
Well, you
bright
mean you
traders.
mean you mean it like the old days, doing opening only according to fair value.
Yes.
Okay, well, so what's happened in the marketplace is because of our low interest rate environment and sort of the efficiency of the designated market maker versus we used to have a specialist system. So in about 2006, with the onset of the hybrid system that evolved into the designated market maker system in 2007, we just didn't have that ability to participate with the
Okay.
specialist,
Yeah.
right?
Okay. That's what
And so
I thought.
we were liquidity providers that would correct those inefficiencies when things opened away from fair value. Now, it's still there to some degree. So to think about, if the market, just look, this is the easiest way to explain it. If the market's opening up significantly, then for you to put your order at yesterday's closing price would not include that premium that the market would be suggesting is the right price for the stock. We call that the implied open or the expected open. So you want to place your orders for the expected open above or below that, not for yesterday's close.
Okay.
Now, if the market's opening flat, okay, it doesn't really matter too much. Except that if for some reason the futures have a quick 5-minute move just before the open, that could disrupt things a little bit. But for the most part, you're trying to put your orders above or below the limit orders, above or below the expected open for the day on each individual stock. Or if you take your quotes and you put them, or you take your stocks and you put them into your quote monitor and you see that everything's pretty benign, like pretty much flat open. And actually today, there wasn't very many stocks that were acting strange, like in terms of big gaps.
No, I mean, we did get a pretty good hit, like, right on the open. You could feel
right
the
on the open, but hey, it is expiration and it's also dividend.
Oh, that's right. That's right.
Right.
That's right.
So there can be some, similar stuff that happens. This is a very different expiration event than when you have, just a regular monthly expiration. This is, quarterly.
And you know what else it is?
It's Yom Kippur.
Yeah, by Yom Kippur. Worked like a charm this year, baby. You held out. And we just said, just real quick, on a side note, we just undercut the low.
Yeah,
25. No, we didn't undercut it. We one tick above in the SPOOs, 25 and a quarter. That was your low on Tuesday, 27 and a half, your low on Wednesday. Current low, 25.50. The bulls stepped up right where they needed to step up. We'll see if it can hang out for the remainder of the day, Rob. But
well, I mean, here's the thing, right? I found that our seasonality calendar is not too bad. So if you're expecting things to be on average what you see here, then you go, okay, now what symbols should I take? And you can put in, if you want to trade some oil stocks, energy stocks, you can type in XLE and you can say, okay, how is expected to perform relative to the SPY and on this day. So the oil stocks in general will probably expect it to be maybe a little bit weaker. Of course, we have the hurricanes and the bottlenecks and other things. So there is an argument that the macro can overwhelm the statistical edge that's there. So you always have to allow for that. You can't be stubborn in the sense that everything's guaranteed. Nothing's guaranteed in trading, unless you are a politician or someone that works for, we won't say, that has information ahead of time. They're pretty much guaranteed, but the rest of us, we work on probabilities. Okay.
Okay.
So we have real value at risk because we know nothing except our either like Dennis interpreting news or reading the tape or looking at some mispricing, looking at relationships, or using the statistics as we've been showing you here. And that's the whole point of this show. Is it's really an educational focus because it's sort of the market's already opened, it's already doing its thing. I can't give you the symbols or the setups for the next day. And actually, I wouldn't want to be in that business of, hey, guess what? Here's all the symbols you should buy tomorrow or sell tomorrow.
A lot can happen, right?
Well, but I'd rather you be the miner, right?
Yeah.
Like, hey, have you ever gone with one of those things where you get to pan for gold a little bit and see if you found something in the, in the flakes there, some sand and whatever. It's like that. There's a lot of stuff in the database to mine for. And, back to my spreadsheet, there's some easy ones where, the ducks line up really well. And then there's some that, you have to use a little bit of discretionary. So I basically have a framework that I approach the data and say, these are the rules, check, 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 check. And it produces the longs and it produces the shorts. And then I have a decision to make, which is, do I just roll with the data? Do I make any adjustments based on news? Do I make any adjustments based on macro themes? Should I eliminate, like if it said that buy every single China stock just because they had been down so much and the probability was that they would bounce back, I could override that and say, no, I'm still not interested in China. Okay.
Yep.
I mean, I'm the, the conductor of the operation here, right? I'm this CEO of my trading business. So I have to override something sometimes, but hey, I'm a human just like you guys. And sometimes
you're not a robot.
No, sometimes there's an argument. Like, listen,
that's psychology, Rob. And that's why we're here. That's why you have StockOdds to help you frame up your trades, get the information, look what the market information, look what it's giving you and going with it. And Rob, I could just tell, when you have these tussles with yourself, more often than not, you're going with the StockOdds. So if you do that, then you can live with the, you can live with the results. It's when you flip flop, like, oh, I'm going to use StockOdds today, but not tomorrow, or this, that, and the other thing. I know you're pretty consistent with it. All right,
well, that's a very good point that you bring out. Is that it's often the days that you don't trade that you wish you would have.
Yep.
So the main thing is and I mentioned to one of my traders today. I said, man, you've been coming along good. Like you're like a metronome. And he's just he's dialed into his StockOdds. He's created a nice framework, real low variance, and it's just like a metronome every single day, just doing it and not getting fancy or trying. So part of my job is to do new things and try some things, right? To press the envelope and see if the market's changing. Are we in a new regime or whatever? So I might jump around a little bit because that's part of my job.
That's
right?
Trading, right?
Okay?
Exactly.
Well, it's part of my responsibility to others as well. Whereas for this gentleman, he's just a metronome. Okay, and that's what I like to see. That
machine.
Yeah, I like to see that. Okay.
All right. We just, I see Eric M. I just got filled on some SPY shares, just hit the 50-day moving average. I mean, we got an area, folks, and I'll just show my charts here. We're going to wrap things up on pre-market prep with StockOdds. Where, Rob, did you release the share?
Yeah, I think I released it for you. Yeah.
Okay, folks, let's just, we draw lines. I don't like to draw a whole lot of lines, but We got a line in the sand here in the S&P 500 index futures. We're knocking on the door of taking out that low. Let's go right to it. We had a low at 25 and a quarter on Tuesday, 27 and a half on Wednesday. Thursday's high a little bit higher up. We bounced off 25 and a half first time. We've been trading in a range this week. We're at the bottom of the range. So if we can catch a bid here, go trade up in the 44.30 handle, that's going to be a win for the bulls. If in fact we take out that current low, if looking at some considerable downside, if we take that out, we might see 4,400. All right, folks, I'm going to wrap things up for today. Rob, great information. You gave me some ideas for some things moving forward. I'm going to wrap it up.
I'll just close on this note. So
sure.
in general, seasonality is amazing for context, and you're going to use it for both the market and the ETFs, and even to some degree the stocks. So it was one of my ducks. I took all the seasonality, but when it came down to the signals, if another signal that you track religiously is your go-to signal, and it's saying the opposite of the seasonality, I would go with your signal. Okay.
All right. Yep. All right. That's it for today, folks. If you want to see the wild conclusion to this trading day, join me at 3:30 p.m. Pre-market prep at the close. Everyone, have a good day.
Good success there. Cheers.